Good morning. You are listening to the Perivis Daily Wrap. It is 7 a.m. on Tuesday, February 10th, and the tone coming into the Indian session is constructive, with trade optimism still doing a lot of the heavy lifting. The key question for today is whether Monday's rally broadens or stays narrowly led by banks and a few high beta pockets. Yesterday, Indian markets closed higher for a second straight session. The Sensex finished at 84,065, up about 0.6%, and the Nifty ended at 25,867, up close to 0.7%. The move was steady through the day after a gap-up start, and it was helped by a clear rotation into domestic-facing sectors. What stood out was leadership. Consumer durables and realty were strong. Basic materials and industrials also did well. Utilities were the one pocket that did not participate much. On the index, State Bank of India was the big mover, up more than 7%, while some defensives and large utilities were softer. Overnight global cues are not the main driver in this set of headlines, but two things are worth keeping in mind. First, the broader global tone has been sensitive to the technology-led rebound after recent volatility around artificial intelligence spending. Second, investors globally have been positioning around a busy run of United States economic data this week, including jobs and inflation, which can still spill over into risk appetite. Now turning to the key developments since the last market close, the biggest single theme remains the India-United States interim trade framework that markets cheered yesterday. Reports cite comments from Commerce and Industry Minister Piyush Goyal pointing to a competitive advantage for Indian goods in the United States after reciprocal tariffs are reduced to 18% under the framework. The emphasis, as cited, is on labor-intensive sectors including textiles, leather and footwear, chemicals and gems and jewelry. The framework for the first phase of the bilateral trade agreement is described as being finalized, with expectations that it could be signed by mid-March. And that matters because this story is not just sentiment, it is also about which sectors could see earnings upgrades and which could face tougher import competition depending on how the fine print evolves. So for today's trade, watch exporters tied to those labor-intensive categories and also watch domestic sectors that rallied hard yesterday for signs of follow-through. The second big development is financials, where both policy and outlook signals hit the tape. One report says the Deposit Insurance and Credit Guarantee Corporation has announced a shift from a flat premium model to a risk-based premium system. The market read-through yesterday was straightforward. Better risk banks could see lower premium costs, and that helped drive strong buying in banking names. Separately, Moody's Ratings has forecast India's growth at 6.4% for fiscal year 2026-27, and it framed that view around strong domestic demand and a stable banking system. Moody's also flagged that asset quality should remain resilient with some stress among micro, small and medium enterprises, but said banks have reserves to absorb losses. It also expects system-wide loan growth in the 11 to 13% range in that fiscal year, and suggested further monetary easing would be conditional on signs of a slowdown. On the public sector bank narrative, Financial Services Secretary M. Nagaraju has expressed confidence that combined profits of public sector banks could cross 2 lakh crore rupees by the end of fiscal year 2026 and pointed to improving asset quality metrics, including low gross non-performing assets and high provisioning coverage, as cited in the report. That set of comments reinforces the bullish positioning that showed up in State Bank of India yesterday, but it also raises the bar for delivery, especially if credit growth and deposit growth diverge. There was also a notable public sector financials headline with potential index implications. Power Finance Corporation said it has acquired 52.63% of the government's holding in REC, making REC a subsidiary. PFC's board has also given in-principle approval to explore a merger of PFC and REC while ensuring the merged entity remains a government company. This follows the Union Budget's stated intent to restructure these public sector non-banking finance companies to improve scale and efficiency. For today, the market will likely focus on how investors handicap the merger mechanics and what it could mean for minority shareholders, funding costs and capital allocation. On currencies and flows, one report notes the rupee fell against the United States dollar in a volatile session yesterday as traders assessed the trade framework details. On flows, exchange data cited in the report shows foreign institutional investors bought equities worth about 1,951 crore rupees on Friday, and another report says foreign portfolio investors were net buyers in the first week of February with inflows of over 8,100 crore rupees. The bigger signal here is persistence because the market's ability to hold recent highs depends heavily on whether foreign buying remains consistent. Now to corporate and policy signals, starting with earnings. Zydus Life Sciences reported December quarter numbers. Standalone profit fell sharply year-on-year, down about 37%, even as standalone income rose. On a consolidated basis, net profit was broadly flat to slightly higher, while consolidated income jumped strongly, up about 31%. For the market, the tension is clear. Strong top-line momentum at the group level, but mixed profit delivery depending on the line item you focus on. Another results update came from Atul Auto. The company reported a sharp jump in profit for the quarter, with consolidated net profit up about 98% year-on-year and consolidated income up about 18%. This is a smaller name, but the magnitude of the change is what makes it notable, and it can influence sentiment in pockets of the auto and three-wheeler supply chain. Beyond earnings, there were a few corporate developments that traders may keep on a watch list. IPCA Laboratories said it received a United States Food and Drug Administration establishment inspection report for its Tarapur API facility with the classification as voluntary action indicated, which is generally seen as a manageable compliance outcome. Bajaj Auto announced the launch of an electric three-wheeler, the Vigo P918, with a listed ex-showroom price of about 411100 INR, positioning it on range and battery size. HCL Tech said it achieved Amazon Web Services competencies in supply chain, security and high-performance computing, a capability signal rather than an immediate numbers trigger, but still relevant for deal conversations. Also in corporate actions, Trident's board approved incorporation of a wholly owned subsidiary aimed at strengthening brand building and selling in overseas markets with emphasis on the United States. And Lloyd's Enterprises board approved raising up to 500 crore rupees through non-convertible debentures, which is worth watching in the context of funding conditions for metals and trading-linked businesses. Now, what will markets watch today? First, continued price discovery around the India-United interim trade framework. Investors will look for any additional clarity on timelines, sectoral carve-outs and safeguards, because that will determine whether yesterday's move becomes a trend or stays a one-off sentiment spike. Second, watch financials closely. After a big move in State Bank of India and strong bank-led momentum, the market will test whether follow-through buying comes in, especially in other public sector banks and in rate-sensitive lenders. The PFC and REC restructuring angle is also likely to stay in focus because it can move both stocks and broader sentiment in public sector financials. Third, keep an eye on the rupee and foreign flows. If the currency stays under pressure while equities rally, that combination can change positioning quickly, especially in exporters versus domestic cyclicals. Finally, on the corporate side, traders will react to the Zydus and IPCA headlines within pharma and to the electric mobility news flow in autos led by Bajaj Auto's product launch. To close, yesterday's rally was built on two pillars, trade optimism and a renewed bid for banks. If those two pillars stay intact through today's session, the market mood can remain firm, but the next leg will depend on breadth and on fresh incremental news rather than repeats of the same narrative. That is the Perivis Daily Wrap for Tuesday morning, February 10th. Thanks for listening.